Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
Welcome everybody, and thanks to really want to give my tribute to Dave for holding on the fort, and Dave was able to bring value to all of you. And as I'm on vacation or he's on vacation, we are able to fill in. But yeah, we will have a great session today. We'll have a
Yeah.
really good one. Look at stock market is up, thank goodness, a little bit. October was a downer month, big time. And today, November 1st, looks like Fed chief didn't speak too much, which is what we wanted. Then the interest rate is not going higher, which is good. And the second thing he says, the economy is robust or something. So let's hope that this week will be a tremendous week coming back. Yeah. So I'll just share the screen quickly so that we could take care of the legal structure that we have. Again, welcome. Glad you made it and hope you're excited. Welcome to Vinney Chopra and Dave Malvinis, Mastermind Inner Circle that we do weekly, Wednesdays at 4 p.m. And a lot of people watch it, by the way. They're working. They are not able to see it. They're not able to come. Jim Duffy, he always makes a point. He texts Dave and I. Thanks, Jim. And I hope you're doing well. And brother Ankur, where is he? We've been missing him in action, huh?
Yeah.
I'll reach out to him tomorrow morning, actually. Guess who's going to pick me up at the airport? Ethan Diaz. Ethan is so kind.
Oh, Ethan,
Yeah,
how's you doing?
yeah, it's very early because I had some meetings today. We are trying to sell 2 properties, had some lawyer issues and all. I couldn't get in the plane because you cannot talk in the plane. So I'm taking a red eye tonight to get there 7 o'clock in the morning. So I'll rest up a little bit. But then he's got his studio now, David, right there in Winter Park. And he's doing more and more sales syndications. So I think he's starting his podcast. So I'll be on his show and also record and all. Then, I just wanted to mention that. Okay, right there. Welcome to our Inner Circle Mentoring. We talk about topics of interest in real estate, multifamily, commercial, hotel, senior living, storage units, you name it, even franchises. We talk a lot about those and businesses. I know Mike Fritz is buying manufacturing facilities, all that stuff. So this webinar is for entertainment and educational purposes only and should not be considered as a legal, accounting, or investment advice. This webinar does not represent an offer to sell or a solicitation of an offer to purchase an investment or security. That has to be done outside this. And then the information presented is believed to be accurate and reliable. We make no representation or warranties expressed or implied as to the accuracy of such information, as we expressly disclaim any liability may be based on such error. Please consult with your attorney, financial advisor, CPA for legal matters and investments and specific tax situations. So I think next is maybe the same thing we talk about. I'm really happy to say that this show tomorrow will not be doing it, but this is where I'm going with Walter Amarello, and Dave knows very well, and Stephen is right there in the organization. He's at the Florida hotel right now, right, Stephen? You told me a little while back. So we do that show here. Then I do on Saturday show with Bo. Then we make reels and all these different things and all episodes. Of course, my Apartment Syndication Made Easy podcast is going on. The third show, which I do on Wednesdays now, is on the youth, mentoring the youth. So that's been really tremendous. And today I invited Ajay Gupta from Celebrations, Florida, to join us. And that goes into all these channels. I think it's My TV or something, 365 to Roku and Apple TV and all that stuff. Alrighty. So there we are. Let's go back. Abundance Mindset. We'll talk about all that in the conference also, which I'll be there this Friday morning, 10 a.m. Walter is going to bring me on. I think there is a speaker at 8. Then Walter is there 9. Then he's going to set it up, and then I'll be there at 10 to 11, trying to give my best on the stage. So yeah, let's talk about what is the state of real estate right now. What's going on? Dave, you want to take on there?
Well,
Yeah.
what's interesting is starting to see prices in Florida sometimes where the per unit is dropped under 100,000 a unit. It's rare, but I am seeing more of that where you haven't seen that for a while. Now, granted, that's BC areas, but for once, it's starting. But you know what? I heard an interesting take on somebody saying how they don't think real estate prices are going to go down at all, for not in the commercial market, because inflation is so high. That even though they're raising interest rates and not as much as selling, inflation is so high that basically your ability to your money doesn't go as far. So that's why the prices haven't compensated or corrected. I think that could be a good thing. Certainly. Now, I'm curious, Vinney, you said you were selling 2 properties, right?
Yes, we are selling. Actually, the one in Cape Coral we are selling, and Punta Gorda we are selling. So Punta Gorda, Hampton Manor, we built our loan, construction loan is 8.10 million. And then we raised $4 million equity for this project. And then I lent some money, I might have mentioned it, and Shahid lent some money because with the cost increases, the bank won't give us the draws. They freeze the draws. Once they find out that cost of construction is going higher, they stopped it and they said, bring more equity in. Then only we're going to give you the next draw. So anyway, we are selling it for 16 million 9. Okay, I'm not advertising to anybody, but it's under contract to close. So we'll have a good chunk of money. I'm giving back $4 million to the investors plus 46% returns. But that's over 3 years, But it took us 3 years to really get to this position, money and all. Yeah. So that's the situation there. My other deal, Williamsburg, is in a dilemma a little bit. We have built it 90%. And now there is change of order. All these bills are there and cost of construction has gone higher.
Wow.
So it took us 3 months to twist the arm of the same bank to give us more money. 3 months. It took us begging, pleading, whatever, right? They have asked us to bring 1.7 million more equity, then they will give us 2.1 million. Oh my gosh. So you have to bring money along with their money to complete the project. Otherwise, the banks are thinking, hey, we underwrote you at that level. How can we give you more money without you injecting more money? You know what I mean, Dave? So that's where we are. And we should be able to open Williamsburg in 3 months. We have 19 seniors who have paid us deposit already. So we already have the website and everything already built, even though the building is not built yet. I was going to say, I don't know if we want to see it, but I was going to share with you. It's like the actors and their pictures are like seniors and everything. So there are these webmasters who build these websites for you, which gives the feeling that it's already operating. It's not that we are giving them any false hope or anything, but we show them this is going to be very similar to Punta Gorda, Cape Coral, blah, blah. We have the movies and all, right? So that's
Vinney, is there growth there in Williamsburg? The reason I ask is I used to be a field consultant in Virginia, and Williamsburg Community Hospital was one of my clients there.
Oh, it is. Oh.
Yeah. So I was wondering, is it on the upward trajectory? Is it flat, or is it going a little down?
It has to go higher. Daryl, the reason I said that when we did the, what's that called, feasibility study, where our location is, for the Williamsburg property, it's
Right.
opposite to independent
Mhm.
senior living.
Mhm.
And they have to send people who need assistance
Mm-hmm.
many miles away. I heard 40 miles away.
Mm.
So they have been wanting us to open the facility ASAP so
Mhm.
that they could take their seniors across the street into our beautiful community. I don't know if I may take the privilege to show. I think we just sent, and this will be a good thing for us to talk about because I'm raising preferred debt of this 1.7 million. I raised 1.2 million in 24 hours.
Wow.
In 24
That's
hours. I've
fast.
never done that actually, but that's where the thing is about. So this is it. Good news right there. See, like right there. Oh no, we designed it. We sent it. Shahidji is there. Anna, can you please? Been working all this morning and everything. I think we just sent that. Uh, I apologize. Let's see here. We just say investment opportunity maybe. Oh, there it is. One of my good friend from Indiana is asking me question on the deal. So we sent it through MailChimp. We
Mhm.
raised 40% of the raise within few hours yesterday
Great.
when Monica and I designed it. And
Mhm.
we are giving like 16% return. Let's just open it up. Would it
Mhm.
open up better if I do? I don't know. How do
Yeah.
I? Yeah, is it? If I go this way, I don't know. Or maybe it will open up in the browser. Let's do that. Maybe it is going to. Yeah, there we
There
go.
you go.
Okay.
Great.
That's a little better. So that way we could look at it. So we designed it in the right real quickly, didn't really put too much. Let's see, zoom in. No, not zoom out, brother. We need zoom in. Oh, it's a command plus. There we go. I should know that. I've been working on Mac for some time now, not a window guy anymore. So there it is, right? So we designed it, 40% already raised. We have a unique opportunity for you, 16% returns per year,
Mm.
2-year hold only. And this
Mhm.
is the real picture right there. Beautiful. And I was there last month, month and a half back, because I had to go to Winston-Salem. Then I went from there to Williamsburg myself. One lady took me there, drove it, and drove me back. And inside, it's going to look just like this because all our properties look the same. And this is the nostalgic feeling of Williamsburg. It's more like a very historic town. So here is the unique opportunity. We have the opportunity to invest in the senior living and memory care Williamsburg, which is about 90% complete. We'll be providing 16% returns per year. It's a 2-year hold investment. The project's temporary certificate of already approved is already approved. The hitch is that with the project is that the construction costs have risen. We have had to procure more money from the lender, and we have received an approval. Received an approval maybe. Approval for an additional 2.1 million loan on a basis that we bring 1.7 million more equity. We are looking to raise 1.8 to 2 million in preferred debt in order to complete this project. We anticipate the Williamsburg facility to be open in 2 to 3 months. We are pre-leasing to seniors so that the building will be stabilized in 9 to 12 months. We have 19 seniors. Actually, we had 20. Just this week, we had one death. It happens because the age and everything on our wait list wanting to move in. Total is 93 units. We will then refinance or sell the asset to return all the investors plus their returns. This is an absolutely beautiful assisted living community that is located in a wealthy area of Virginia. So, Daryl, you were talking about the right there, brother. So,
Yeah, actually, the facility looks and resembles the way the homes and the buildings look in that town.
okay, you're right.
Yeah,
Yes,
yeah,
yes. You know
really
what?
good.
I'm so glad you said that
Mhm.
because you will see some other pictures. We had to change our thingy. Oh,
Mhm.
see, look at this movie right there. Okay, now this movie, does it go to there? Yeah, it does. This is like Punta Gorda, right?
Punta Gorda features
Here,
6,000
let me
square
put
foot
it
facility
one
in the
second,
area.
so that you could
At
hear
Hampton
it
Manor
too.
of Punta Gorda, our
Yeah, there we
residents
go.
get the daily support they need as independent
So
as possible.
everything
We
will look
extend
the
our
same.
highest level of service of value and
Exactly
quality.
the same.
Everything you were looking for in an
Nice.
assisted living community.
Very nice.
All award-winning meals are created and served restaurant style at our facility. Our stylish beauty salon will have you looking glamorous in no time and in the know. Our luxurious spot allows you a tranquil place to unwind and distress. Our beautiful, elegant private dining room. With 3 gorgeous garden courtyards, residents can enjoy a game
Over
of
there we
putt-putt
have
golf.
6 courtyards. 6 courtyards.
Residents can also enjoy our beautiful in-ground swimming pool.
I don't know if we have swimming pool there. I have to check because it snows there and all that.
Enjoy time socializing at our coffee bistro. The club room is designed for some hearty pool or card games and more.
Multi-family.
And right around the corner is our private library. The Modern Theater invite you to indulge your senses and a delicious bag of popcorn and your favorite movie. The spacious sunroom invite you and your guests to take an afternoon of conversation or perhaps a puzzle or card games. We offer 72 spacious apartments
this
featuring
is
private or courtyard views, kitchenettes, and
plus
equally
20 or
spacious
something
restrooms.
like it.
Whether you like a
Punta
studio
Gorda, we
apartment
have-
or 1-bedroom apartment or a 2-bedroom apartment, there is a size and design to match your lifestyle. There are 22 studio suites in memory care and features a private dining room. Our
Memory
entertainment
care
and common
also.
areas are inviting, and our staff will be here to ensure your loved ones receive the very best care. Hampton Manor of Punta Gorda. Let us be the writers of the next happy chapter.
Anyway, no, I just wanted to share. So in other words, we put this also right there, link for us to show our investors, right? So it's a very small email, as you could see, just to give a little bit information. And then we showed the other pictures. Look at this one right there, Daryl, just like you said, they had us to change these whole thing to look like it should fit into the community, right?
Right.
Yeah.
Yeah.
And this is where on this side is the independent living right here, big time, huge structures. And there are $1 million homes right around there. There is a Marriott in the back. I remember I stayed there actually. So it's a beautiful thing. And then click here for the website. We also give that too. Very easy. Monica is amazing. So we do this through MailChimp. We do it. And there it is. So we are able to, please go ahead. Yeah. Yeah. So independent living, home, floor plans, we share everything, which is, that's our logo, Hampton Manor of Williamsburg. That's how we are able to get a lot of leads. And then we are able to get them to give us the deposit for them to come into it, right? As soon as we open. Just like in Punta Gorda, we had 55 seniors who gave us $5,000 before they were waiting for 4 months because we didn't get the full completion inspection or something. It got delayed. But these are real pictures, real everything of this property. But just the pictures of the seniors, these are stock pictures, they call them. So that's how they build it. Look at that. So again, this is a great opportunity. 16%. A lot of people are saying, Vinney, oh my gosh, to make even 7-8% right now in this market is tough, very tough. And this is real estate, which is already built. It's not even in the process of building. It's 90% built. It's a home run kind of thing. Yeah. So that's why I raised 1.2 million, close to it, within 24 hours. Yeah.
Amazing.
Yeah. But Dave, I do want to say something. I've been reading a lot of articles. Well, while I was on vacation, I read some, but lately, this week and over the weekend, $89 billion are at stake in multifamily at this time in loans. 89 billion.
It goes over $1 trillion in
Yeah,
2024.
it goes over it. You're so right. Yeah. So what's that about? So 89 billion and trillion is 100 billion is trillion.
Yeah, it's 1,000 billion basically is a
Yeah.
trillion. So yeah, and then it goes into 2 trillion. And it's not just, it's people who secure debt that had basically it's a bridge loan. It's a term debt. Might have been a 5-year fix. Then they're going to have to refinance it.
Correct.
That's the issue with some of those debts. But if those operators purchased properly, they should be able to exit. At least the banks aren't going to get in trouble.
Yeah.
There may be some operators that if they can't sell for what they want, they may have to sell and even do creative financing if somebody doesn't want to pay the full value, but they got to pay off that underlying mortgage. That's what might have to happen. But the hard thing is everybody pushed cash flows to the max over the last couple of years. And so if you can't go up on the rents, you're at that catch-22. And it's not just the real estate business. There's literally, if you take the top, I listened to Patrick Bet David. Do you know who that is?
I think so. Yeah.
Yeah. He was talking about, I was listening to his podcast this morning, and he was saying that if you take out the top 7 of the S&P 500, so the top 7 made like 93% on the growth in the last year. You remove them, the entire rest of the S&P 500 have taken a loss in the same period of time. So it elevated the entire S&P 500. Part of that is the CEOs are feeling that they've got this debt coming due, and it's going to be at a much higher rate than they locked in maybe 4 or 5 years ago. These are realities when you're in business, whether it's real estate or whatever the business. Yeah. If you're dependent on, if you've got loans out, I guess the more you have, the better. What is the old saying? If you owe the bank $1 million, that's your problem. If you owe them 100 million, that's their problem.
Oh my gosh, Robert Kiyosaki, that's what he talks about. I know I was watching one of his videos and he was saying, I have more debt, good debt or whatever. The more debt is making him rich. And that's true. Leverage is such a huge thing. We talk about it in this class and all too. When stock market, when I buy Google says, give me all the money. The broker says, give me full price of the share of the stock. But with real estate, we buy real estate with 70 or 60% now, maybe. Bank says, I'll give you the money. But then when it grows in value, bank says, you take all the profit. Just like in stock market too. If I sell it, I'll make all the profit, right? We'll make all the profit, 100% on the investment. And in this case, we only invested 30% down, but the gain was on 100%. So that's the beauty when the tax advantage and all that. But then let me talk about inflation. Did Fed talk about inflation today? What was the number? I didn't really get to listen to it.
The problem is they don't use consumer items anymore in there. They don't use eggs. They don't use things that are really people are buying. Some of those things are up 100% or more. But yeah, so they're claiming, I think they said inflation was at just under 4%.
Oh, under 4. So it's come down from 6.5, 7.5. Whatever.
Vinny, it's a Ponzi game there. They're not giving the true inflation. The average person cannot go out and eat like they could 2 years ago. What I used to pay $30 for, I'm now paying $50
have
for.
Increased the price. You're so right, Stephen. Oh my gosh, they have just bumped up. That's been a good avenue for them to just bump up the price and then don't come back down. You know? Yeah. No, I see your point. Thank you. No, the thing is, let's talk about then what kind of opportunities are they coming in 2024? We've been waiting all this 2023. Are they coming in 24? or 25. Nobody's got the crystal ball.
I have a piece of land under contract, and what we're going to build is we're having plans drawn, provided we can get approval. What do they call them? Flex space, where they got the overhead garage door and a small office, and we're going to build 18 units. But and I'm going to do what you did. I'm going to just raise all the money as interest, because what we're going to do is we're going to build 6 of the units, which will bring in about $90,000 a year of income, and at a 6 cap rate, that's 1.5 million, I believe. But I think we'll be all in at about 500,000 on the first building. So then we'll refinance at 60%, build the next building, fill it up, and hopefully by that time the interest rates will come down, and then we'll refinance it with permanent financing. But same thing that you were talking about, I was thinking 15% would be good to offer a private lender on that.
Sure.
But now you got me thinking, wow, Vinny's paying 16%.
Wasn't it said last week that 15 to 20% was a good area to, when you're talking about paying people back with the deals like what I'm doing and other things like that, right around there? What was it, you or was it?
Yeah, total returns of 15, 16 to 18, 19 is pretty good return. That's cash flow and equity together. In my case, because it's a assisted living, it's not producing any money yet. So we're going to be ramping it up, opening it up, and then it's going to take us some time to stabilize it, we call it, right? Then it will start making cash flow. We'll reevaluate it and then refi or sell it. So that's where we are counting on that side, right? So Stephen, you're right. 18, 16, you said 15, we said 16. I know my partner and I talked about it day before yesterday. We said, let's just put 1 extra percentage in there. So we did 16, and investors are biting. And the good part is we send it also to the investors of Punta Gorda, which is closing hopefully this week. So we are going to give 6 million back to the investors almost. So some of the investors are saying, Vinny, don't give us the money back, because they have to pay, capital gain they have to pay anyway. On the long-term capital gain, they have to pay that. Their principal 4 million back will have no tax consequence, but the 2 million, which is going back like almost 50% or 45%, like I mentioned, they have to pay tax on it, because that's a long-term capital gain. Unless they have K1 passive losses that they have accumulated, then the passive gain can be batted against passive losses which have been accumulated. I'm not CPA, but that's how Ted Lanzaro and other CPAs have always mentioned that. That's why we say also the cost segregation. People love cost segregation, but you have to recapture all the depreciation that we took in the last 2, 3, 4 years. In this case, we didn't. Punta Gorda just got built last year. We opened it up and all that. Yeah. So anyway, Yeah. So here or there, the big thing is for us to make a good, solid acquisition, maybe by December, maybe not by December, maybe next January, February, March, April. One thing definitely I know, we'll need equity and we'll need loan. So we need to be looking at, okay, who are the investors? Like I have a personal coaching student, Pramod, and we were discussing this today or yesterday. He was just floundering, he was doing flipping and all that, which is great. But the big thing is he wants to buy a 40-unit building. Even though he went through my whole course, I had to show him, hey, you got to really start from the basics and start talking to brokers to find a deal. In what area code you're going to buy? Is it going to be walking distance or driving distance from you in Chicago, wherever he lives? I think Chicago, anyway. So all that stuff, right? But That's what it is. Having the investors in your pocket is big. I know, Dave, you got that big investor, brother, about the golf course. How is that going? Yeah.
They're still doing, the attorneys are going back and forth right now because we're trying to buy it as a going concern. So we're not just trying to buy the assets. We want to buy the business as it sits because we'll be buying it in the winter. And there's not a lot of income in the winter. So we want all those liquor licenses, all of that stuff. There's a lease on the golf cart. So we're going to buy it with the existing debt in place at lower interest rates without assuming it, because we're just going to buy the shares of the corporation. And there's no PG on the debt. And so that's how the attorneys want to structure it rather than pay it off. And they've got some credit lines in place, a lot of neat things. So the attorneys are, when you buy a going concern, like you're technically buying the business, they got to go deep into the books, because you got to make sure that there's no lawsuits potentially that could have happened in the last, a lot of different things. But the insurance is in place. That's the other thing, is we want to keep the existing insurance so you don't have to go buy new insurance. So there's a lot of aspects. But yeah, we're still.
So would the seller be as an equity partner in the new buyer, 10% partner, 8% partner?
No, it's a cash purchase. There won't even be any debt on the initially. So the deal is, it's a long explanation, but I may have to be in Dubai in early December because Live Golf was the new thing that's competing with the PGA, and Live is looking for golf courses that they can put their name on in the U.S. So we're going to hopefully go get a $20 million. I'm going to go sign a $20 million sponsorship, put their name on the course for 5 years.
Oh, wow.
Awesome. So we're looking at it as a business, and the timing in that business is, when I say the timing, it's just the golf industry is segmented right now between PGA and Live, and it's a good time to potentially make a move. And so that's what we're trying to do, but there's a lot of details. We'll see where it goes. The person who's investing, he is experienced in that type of asset, so it's not dependent on me so much.
Together. Yeah, no, that's fantastic. Again, I think we could discuss a lot of things come to my mind. The biggest thing is to be really aware what kind of loan qualifications process is needed. And how much loan, and even though it's at a higher percentage, we have been talking to look for sellers where buyers can get us, we can get seller financing, or being creative, which David is master at. So maybe that still will be true if the interest rates don't go down. I was thinking maybe December, it might start inching back down, and then next year a little bit lower. Will come to some, but it's all hearsay. We just don't know. Crystal ball, nobody's got the crystal ball. But at the same token, we need to be sure where we're going to purchase. See, if we don't know if you're going to purchase in the backyard or 5 miles, 50 miles away, or in another state, unless we are talking to the brokers, or we are going through websites like Crexy is one big one. Of course, a lot of different companies have their own websites now, and they are advertising their product over there. So what should be our line to get more look at what's in trouble? Who's in trouble? Anybody wants to answer that? Yeah.
One of the things, and I don't want to hog the call, one of the things that I've been doing as I look on Crexy is the length of time that the listing is on the market. So now I'm not only just recording the length of time it's on the market, I'm like, if I'm interested in the asset, then I'm running a spreadsheet to keep track of the asset, because if it goes off market and I know it didn't sell, then I can direct mail or start to skip trace and find the owners of those properties without the broker in place. And I think that's where you'll get I think more sellers are open to seller finance. There's a lot of sellers who can't be, though. They've got a bridge loan, but it's just trying to find, it's just a constant search. I think of assets that are, like you talk about the silver tsunami. There's so many people wanting to retire today. And they're not so much in your asset class, Vinny, and there's not nearly as many in that asset class as if you're in the 20 to 100 units. There's quite a bit more, I think, traction.
I think we may be missing the bigger boat. And I think is it BlackRock? Is that
Yeah.
But they've set aside a huge amount of money for when things go south, when winter comes, to buy the mom and pop, the people that have 5 or 10 units, and swoop those up. But that's, I was wondering if there's a way that you can pull how long somebody has owned some property and get their age. And so if we see somebody at 60, 70, 80 that's got 10, 20 pieces of property, and they're just, they're living the life, they're having a good time, but they're tired of the property managers and they're tired of dealing with it. They just want the cash flow. And we can do that seller financing and say, hey, we'll pay you for the next 40 years. And if you die, your kids get it for the next 20 or whatever. It just seems to be, that would be, I think that is, it's not the big money, but I would say that in some ways it's the easier money, because once they realize, when Dave, you start structuring those deals, like for those kids, right? They're like, wow, I can get out of this way and I'm still making money. Yeah. Okay. At that point in time, they don't need, if you have no debt, no bad debt, and you've got $10,000 to $20,000 a month coming in, that's 10 houses to 20 houses, $1,000 a month, cut it back to 15,000, take your cash flow there, whatever. Everybody's happy. You can't spend $15,000 a month without feeling guilty. It's real. That's a lot of vacations.
I've spent a lot more than that.
I know, but you know what I'm saying, right? You can only buy your kids so many Reebok shoes and go on so many vacations before you say, you know what, this is silly. But $15,000 a month, you can travel the United States every month, go everywhere you want, do anything you want, spend time with the wife, the grandkids, take them on vacation. That kind of money is for most people.
Right. Yes,
and they're not doing anything for it. They literally are not doing anything for it. It's zero problems for them. That's a huge, I've been trying to rack my brains. Walter's got me on a leash not to invest in it right now. But that doesn't mean I don't think about it. And I'm listening to you guys, and the whole thing that we're doing the vending machines for is because of that. But the vending machines are going to turn into a pretty nice coin, and I'm going to have to do something with that money. And gosh, I'm going to have to do anybody know anybody that does syndication? Somebody that smiles a lot or something like that I can, I'm going to have to put that money somewhere. But if I do come across somebody that's got 10 properties, I would definitely, like Gary, when you see Gary Eckert tomorrow or next day, I already told Gary that he needs to talk to Dave, because he had this deal. He was talking about selling financing, and I could tell Gary but I don't think I know he doesn't know near what. I think there might be a deal there is what I'm saying, is structure it, because he was already talking term, but he was anyway, from what I've listened to you and what Gary said, I'm like, you're missing the point, but I'm not going to get in the middle of it because Dave can explain it a lot better than me. But that's the thing. It's this seller financing, and it's these mom and pop people that are out there. We're looking at the big picture. Vinny he started small. He's huge now, but there's a lot more little bitty mom and poppers out there than there are Vinnies.
100%. 100%. No, I was going to say, Stephen, something you really sparked in my mind. Who knows the age of the owner? Like you mentioned it, right? I don't think it's written in any of the public records unless we go and find out the name and the city. Then maybe we could Google it. And nowadays you can tell how old somebody is right there. But the thing which came to my mind was, maybe we should be talking to small unit property management company people.
There you go.
And there you are talking to them. Hey, I've looked at the area. I live nearby. If it's in your backyard, it can be done that way. Or we have a group of people who want to buy smaller number of units, 10 to 30. But you find out also the property management companies who are in that range. Look,
that's smart.
That zip code. Now you talk to the owner. Don't talk to the secretary like that. You say, we are looking at maybe you have the best knowledge which properties might be where the owners want to get rid of or sell. And maybe they're getting to that age, retiring and this and that. One thing I would like to mention right now is many of these people don't want to sell because of the tax burden. Dave, we talked about that before, because they're going to make 100% is their equity gain kind of thing. So they're going to pay long-term capital gain of 20% at least. And if they took depreciation, then it's going to be one increase of the whole profits will be higher because they have to capture the depreciation that they took at the sale. So that was one thing coming to my mind, Stephen, talking to property management companies.
That's all for this episode of The Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.